You've probably seen a million of these videos. Turn $500 into $10,000 in 30 days. Yeah, and then they quietly disappear a month later. So let's do something different. Let's talk about what actually works and how I'd grow a $500 trading account in 2026 step by step in a way that you can actually repeat for the rest of your trading. No hype, no fake secrets, just a framework that builds real longevity. Because if it can't scale, it's not a strategy. It's a lottery ticket you happen to win once or twice. And when it comes to trading, we're not building lottery winners, we're building machines that print consistent results over decades, hopefully. So I learned this the hard way. When I started, I was all over the place, chasing penny stocks, gambling on low volume options, and buying into random indicators that promised over 90% accuracy. Every win that I had felt like I was getting closer, but every loss just reminded me that none of it was actually replicable. You see, you can't scale randomness, and you can't scale luck. It's like finding a $20 bill on the sidewalk and thinking you've just unlocked a new side hustle. I know we've all thought about this as kids, and it seems nice, but it's not something that we can build a plan around. And here's what's even more dangerous. Sometimes the market rewards bad behavior early on. You over-leverage, you win, and you think that's a skill. You size up, it works again, and then boom, it's gone. So when I talk about growing a small account, I'm not talking about flipping it. I'm talking about building something that can actually scale for 30 years or more. If you don't have a process that can handle 10x your current size, you're not building a strategy, you're just playing with one. Now here's the shift that separates gamblers from the traders. You stop thinking in wins and losses, and you start thinking in probabilities and longevity. Trading isn't about finding the perfect setup, it's about finding a process that you can repeat calmly over and over again. If your system only works when the market's hot, or it only works when you're feeling it, it's not a system. It's just emotional roulette. The goal isn't to make money fast, it's to build habits and data that make you unstoppable over time. That's the foundation of this $500 plan. Now, before you try to grow that $500, you need to earn the right to deploy it. That means finding your edge and proving that it actually works. I'm not talking about copying some random YouTuber's MACD crossover strategy or ICT concept, this or that. I mean your edge, something that fits your personality, your schedule, and your tolerance for pain. If you're someone who gets antsy waiting all day for a couple trades, well, maybe scalping just isn't for you. If you like structure and patience, well, swing trading might be in your lane. Here's my rule. Don't touch your $500 live account until you've logged at least 100 trades on paper. Yeah, 100. It sounds like a lot, but if you can't make it through 100 sample trades without getting bored or frustrated, trading for a living is going to eat you alive. Swing traders, you can get away with maybe 30 to 50 trades because your trades last longer, but the principle here is still the same. Build a large enough sample size to actually know something, because 5 lucky trades means nothing. It's like flipping a coin 5 times and thinking you just broke physics. I spent almost 2 years trading tiny positions and prop firm challenges where I was making basically no money at all. But I was learning. I was collecting data that told me this approach might actually be able to scale. And that's how you build confidence, not by winning, but by knowing why you win. Now, once you start trading, you need to track everything. I'm talking your win rate, your average risk reward, your best times of day, your emotional state, all of it. You need to know yourself better than the market does. If you don't track your trades, you're flying blind. You can't improve what you don't measure. When I started tracking, I realized I wasn't losing because my strategy sucked. I was actually losing because I was trading outside of my strategy. My worst trades were when I was bored or trying to make back a loss. When I removed those, I realized, oh my gosh, I'm actually profitable. And that's when it hit me. The edge isn't just the strategy. It's you staying disciplined enough to actually use it. Now, personally, I use TradeZilla to journal and track everything because it does all the heavy lifting for me. Stats, the chart, the trade reviews, it's all just in one place. You don't need that tool, but you need the process. Excel, Notion, write it down on your iPad. I don't really care. Just start collecting that data and make sure it's useful so you can actually go back to it. Now, when you see your numbers on paper, trading stops being emotional. You stop guessing and start analyzing. You go from, I think I'm good here, to, I know my system has a 56% win rate with a 1.7 risk-reward ratio. I just need to execute. That's when trading starts to feel like a business, not a gamble. This next step might sound boring, but I'm telling you right now, it is one of the smartest things you can do. Commit to a monthly deposit. Every month, no matter what happens, you add, let's say, $50 to your account. I know some of you just rolled your eyes and said that's not real trading, but here's the thing. Adding capital is part of every successful business. If you ran a restaurant and only put down a deposit to build the building, how would you get the food, the drinks, and all the things you need to create the atmosphere for your restaurant? I'd bet you'd be out of business pretty fast. Trading is the exact same way. By adding to your account monthly, you're stacking momentum. It's not about cheating the compound effect, it's about feeding it. Plus, this removes a lot of pressure. You're not sitting here thinking, if I lose this week, I'm done. No money's left. You know you're contributing to your future regardless. That consistency gives you psychological breathing room. And that's where better decision making comes from. Now for the key part, risk. If you start with $500, you should never risk more than 2% per trade. That's $10. And yeah, I know $10 doesn't sound like much, but remember, we're not chasing dopamine, we are chasing scalability. Because if you can't manage $10 of risk without going rogue, you're not ready to handle $1,000 of risk later on. Each month, you'll recalculate that 2% based on your starting balance for the month. So say you end month one at $510. You deposit $50. Now that's $560 sitting in your account. Your new 2% risk is $11.20 per trade. Month 2 ends at $580. You deposit another $50. Now you're at $630. 2% from there is $12.60 per trade. See how this scales? It's small, but it's structured growth. And most traders fail simply because they never build structure. Now here's where the 99% quit, when it gets boring. They trade for a few months, nothing exciting happens, and they think the system stopped working. But that's exactly when your edge is starting to kick in. You don't see the compounding early on because your base is still small, but as you repeat the process, the numbers start to bend upward faster than you would ever expect. Trading is like fitness. The first few months, you're learning form. It's not glamorous, it kind of looks nasty, but it sets you up to lift heavy later on. So when it gets boring, that's your cue that you're on the right track. Let's put some numbers behind this. Start with $500. Add $50 every month. Risk 2% per trade. Now, here's your hypothetical P&L for 12 months. Month 1, plus 10. Month 2, down 12. Month 3, up 43. Month 4, plus 5. Month 5, plus 14. Month 6, down 24. Month 7, plus 57. Month 8, plus 3. Month 9, plus 38. Month 10, minus 40. Month 11, plus 93. And month 12, minus 8. You're not killing it. You're just surviving, you're learning, you're improving. And at the end of the year, you've taken your account to roughly $1,280. That's a 156% increase on tiny risk, but your profits only make up about $179. Now imagine year 2. Same discipline, same deposits, a slightly better edge because your data is now improving. Maybe you now average 5% per month instead of 3. By year 3, that $500 has turned into several thousand, if not more than $10,000, all from small compounding, steady deposits, and no blowups. That's what real growth actually looks like. It's not flashy, but it's realistic and it's repeatable. As your journal grows, you'll start seeing the magic in the numbers. You'll realize things like, I lose more when I trade the open, or my best trades all happen in trending conditions. This awareness is gold. Every month, your job is to make tiny adjustments, 1% tweaks that make you slightly better. Those micro improvements compound way faster than you think, and before long, you're trading like a completely different person. Calmer, sharper, confident. Not because you found a secret, but because you built data-backed discipline. Now, this is where most are gonna roll their eyes, but this is the truth that makes or breaks your success. You must think long-term. I mean really long-term. If your plan only works for 6 months, it's not a plan. If your system relies on a specific market condition, it's fragile. But if you could wake up in 2030, 2040, 2050, and still execute this plan with slightly higher numbers, that is real freedom. Because the traders who win aren't the ones who had a good 1 year. They're the ones who had 30 decent ones stacked together. The consistency compounds faster than the returns. So don't ask, how fast can I grow my $500? Ask, can I build something that lasts long enough to actually matter? That's the real game.